Well, hey, I am Ryan Keeton with eXp Realty, and we're here with another edition of Your Questions Revealed. Today, we're going to talk about the USDA loan, and I am very excited with our guest today. And I'll allow her to go ahead and kind of introduce herself, talk about where you're from, what you do, and we'll just kind of dive in real quickly to the USDA loan.
Sure. Well, thank you, Ryan. Thank you, first of all, for having us, and we are certainly glad to be a part of your project. I'm Terri Gifford, and I work with EZ Mortgage Loans here in Ashland, Kentucky. We've been around for about 21 years now in business. We're a small brokerage. We're set up with many lenders, so we have a lot of different products and things to offer borrowers. So to tell you a little bit about that, one of our most exciting programs, and definitely one that we do the most of, is the USDA loan. So that's what we're going to talk about today.
Awesome. So, why don't you just kind of jump in and just explain what exactly is a USDA loan? And I know a lot of times it'll be referred to as an RD loan, so they're one and the same. A lot of times people will get confused with that. But
Yep.
can you tell us exactly what it is?
Yes, it's basically a product through the Farm Credit Services, the Department of Agriculture. So it is a government loan. It's backed by government agencies. The primary benefit of the program is to provide additional economic development opportunity for the rural areas. So the program is there to promote obviously local home purchasing and anything that might help the development of the rural areas and to maybe grow other businesses and such like that. So that is what the program was actually designed for.
So, what do you think are primarily some of the best benefits of a USDA loan versus maybe an FHA or a conventional loan?
Well, anytime we have a client, one of the things that we like to do is to provide them all of their options. So we will lay out FHA, we will lay out conventional loans, and then obviously the USDA loan to every borrower that comes in here. So those are obviously the top primary programs. However, there is inevitably an undying amount of interest in the USDA loan. Almost every time a borrower is going to point towards that and want more information on it. Mostly because the main benefit to it is the fact that it's 100% financing. So outside of the VA loan, which is also 100% financing, not everyone's a veteran. So this is the program that will benefit those that are not, active military or previous military veterans with 100% financing. And another benefit that they really like is the fact that they have excellent rates, just like any of the other government programs. And like I say, 9 out of 10 times when someone sits down and they have that comparison, that USDA loan is almost always the one they like.
Yeah. So, can you think of any drawbacks in regards to the USDA loan? The 100% financing is obviously great, but with great
Mhm.
always comes the other flip side a little
Yeah.
bit. So,
Well, absolutely, you're right. Anytime you're dealing with a high risk loan, and this is a high risk loan in that it's 100% financing, literally no investment to the buyer at all. They would come to the closing table in many cases, getting their earnest money back. It's a great loan, but it is a government loan also. So they are very thorough in their underwriting processes. They also are not very fond of homes that need a lot of repairs. It's not the fixer-upper loan, so to speak. They do look at the appraisal, pretty heavily, and they look for anything that the appraiser might find to be an issue, and they would require a bit of repairs. Now, we're not talking about major things. The appraiser is generally going to notate things like, water in the basement or a bad roof or AC unit or central heat that doesn't
handrails,
work. What?
handrails.
Handrails. Oh my word. Yes, we're going to get handrails on those every time. Anytime you have the multiple stairs, they will mention that. As far as drawbacks of it, honestly, the only thing I can say about that is they do have income limitations. The loan is geared towards low to moderate income families. And so they do have income limits. A family of four, which is generally what you would see in this area, the income limit is 86,850, which is pretty generous,
Hmm.
to be honest. It's pretty generous, and of course it goes up from there. The more members of the family. One of the other drawbacks would be if you own a previous home or if you currently own a home. We've seen this a lot where people will own a smaller home and want to keep it as a rental or
Yeah.
something like that. And the USDA loan is definitely geared towards that one
One
home,
time.
yeah, that they're going to live in primarily as their own residence. So if you have other mortgages, it does, you have to sell that home in most cases. And also location, which isn't really a drawback because it's geared towards the rural areas. If you are wanting to stay within the city limits, it is location oriented, property oriented type program. So it does depend on the location of the home. But generally, we come in when a person is trying to get pre-qualified for a home and they haven't found a home yet. So if they really like that program, then they know where to go look. They know
Yeah.
that within the city limits of Ashland isn't going to work on that program. We would have to do something else. Um, and they know all of those guidelines before they go out and start house shopping. So
Yeah, it's really nice because it is something that their realtor or their lender, and eventually them, can look up and find those addresses really easily because there is a website that you can go into, put the website, put in the address, and boom, it tells you it's black and white. It's
right,
either
if
in
it's
the
eligible
program
or
or
not,
not,
and that
or
is
eligible.
right because we could all work together to get them in the right place.
So, can you talk a little bit about what type of credit scores are required for a USDA loan? And I know that's a little bit loaded with the situation that we're in right now. So, I want to focus more on we're going to get past this. This will
Oh,
eventually we'll eventually
absolutely.
get out of this. So, there are some of the things that have changed depending on who the lender is in regards to what the requirements. But in general, what are the requirements credit score wise for USDA loans?
Right. For the most part, 600 credit score will get you in the door. Um, Now, I will say that most lenders do kind of prefer the 640. That seems to be the threshold where the best interest rates are available. Also, a little less hassle in underwriting, a little less, extra questions or red tape that they may have to deal with when you fall below 640. We have lenders out there that will actually say they will do a 580. However, you're going to be dealing with a lot more
Yeah.
hoops. 640 is the key credit score, to be
That
honest,
seems to
for
be
everything to go
consistently,
smooth.
yeah, what I hear as well, that 640 is kind of the threshold. Obviously, we're dealing with a little bit of different stuff now with
Right.
COVID, but as a general rule, so I was hoping that you could kind of cover a little bit and speak briefly on debt to income ratios or DTI because it's something people are going to hear. That, to be honest, I'm asking of every single lender because somebody's going to say something in a different way that's just going to click, or somebody may be just interested in USDA loans and nothing else. So,
Hmm.
can you talk a little bit about what that is, what people should expect, and if they hear that, that way it's not so intimidating once they get into the home buying process?
Right. Well, the debt to income ratio is calculated by the gross income versus your monthly debt. Now, a lot of people get confused with the monthly debt part of it. They want to, it does not include insurance, it does not include utility bills, it includes only things that report to credit, car payments, credit cards, things like that. Now, there's two debt ratios that any loan deals with, and primarily the front end ratio is just the housing payment versus the gross income. They like to see that right around 28%. That's the ideal mark. The back end ratio, however, is the one that will usually be the tricky part, and that is the back end ratio is with all of your debt, including the new house payment. So with the USDA, they have a preference of a debt ratio front end 28%, back end 41%. That's what they like to see. A little better than conventional. Conventional usually wants you to stay around 36. Um, FHA will give you a little bit more flexibility and even go as high as 50%. I've seen it go. Um, Now, the debt ratio with the USDA loan, they tend to be a little strict on it, especially for first time home buyers and low to moderate income families, which is what this program is geared towards. They don't want them to get in over their head. They don't want, they don't,
Yeah, that's
the
what I was
last
going to
thing,
add is that
yeah,
as a caveat is that's done to protect the buyer. That's not done
absolutely.
as to try to exclude anyone. It's trying to set them up for success and not
Right.
put them in a position to where they possibly would lose their home.
Absolutely. And there are exceptions to the rule. For example, if we get a good, strong buyer and they are falling in at 44, 45%, it's not to say that the loan can't be done. What they'll be looking for, however, is some exceptions to the rules like a 401k with some savings in it, some reserves, which is basically savings.
Yeah.
That really helps push the higher debt ratios. But yes, like you said, they are setting them up for success. They don't want them to fail. They don't want, if they have to go out and buy that new car, their current car broke down and they have to get a new one, and now all of a sudden they're in way over their head, because we all know cars are very expensive. So they definitely want to make sure that you will succeed.
So I think you touched on this a little bit earlier, but I think it's best a good idea to basically circle back and just make sure that we separate the two.
Mhm.
Um, and that is in regards to all homes qualify for USDA. And, because I think a lot of times people will get a little confused. They're like, well, I qualify for a USDA loan. I'm pre approved. I should be able to get that house. Well, that house may not qualify for whatever reason, like foreclosures. So, can you kind of talk about that a little bit and just kind of wrap that in a bow?
Well, I will say, as far as the homes that won't qualify, or issues with the homes, definitely the fixer uppers are not. It's not in their wheelhouse. To have a few repairs is not an issue. As a matter of fact, if the home appraises, this is another cool deal about, kind of leads me to another cool thing about USDA, is they will allow you to actually finance 102% of the appraised value. So let's say, for example, you have a home price of 145 and the appraisal comes in at 150, you can actually borrow 153. So if you, of course, that would include your closing costs and then maybe give you a little bit for some repairs. It maybe, you might be able to use them for something that you might need on the house. The location is definitely an issue. Another thing that the USDA is not real good with, and that is double wides, manufactured housing, no single wides of any sort, and they have some very strict rules on the double wides.
Yeah.
If it's been previously financed as a USDA loan and it's a double wide, it will be fine. If it's otherwise, they want to see a brand new construction by a USDA approved builder. So,
Yeah.
and that can get pretty strenuous and pretty expensive too, because they have some very specific guidelines on those. So,
And the other thing I want to just kind of as a caveat and let you, just confirm that I'm correct on this. The appraiser is the one that makes the determination of whether that property qualifies or passes what the USDA requirements are. I don't get to make that decision, and the lender doesn't get to make that decision.
no, when it comes to the government loans, they definitely have very specific guidelines that have to be passed through the appraiser. So, yes, you're right. The FHA loans and the USDA loans do have some very specific standards that they want the home to qualify in. But typically,
Okay.
it's pretty lenient. But you're right, there are standards there.
Yeah. So I want to pivot now to mortgage insurance and have you define exactly what that is, and then how does that come into play with the USDA loan if that drops off, if there's any ways to get that dropped off at some point, and how that factors in.
Okay. Well, mortgage insurance is the way I define it to buyers and to customers. It's basically everybody has to have insurance. We have insurance on everything: our cars, our homes, everything has an insurance. So basically, the mortgage insurance is a policy um, for the lender from the people that service the loans. Fannie Mae, Freddie Mac, Ginnie Mae, all of the government agencies, they are insuring the loans. So basically, they are backing a portion of that loan in the event the buyer were to default. The lender has the ability to recover some of the losses from the insuring agency. So anytime you're dealing again with these high risk loans, these 100% low to down, little to no down payment loans, they wanted insurance in place to kind of protect everybody's risk and interest in the event of job loss. I mean, what we're going through right now with COVID-19, a lot of job loss, a lot of people not being able to make those payments. So that insurance will kick in, and hopefully there's enough processes involved that will prevent people from having to deal with foreclosure. Hopefully that doesn't,
Yeah.
the forbearance programs and things like that they're coming up with right now will certainly halt, hopefully, anything too negative to happen.
Yeah, I think we could do a whole nother talk on what forbearance is and what it
Oh,
isn't,
yes, we most certainly
but
could. We
we'll leave
most
that for
certainly
another
could.
day.
Yeah. And to add to that, to answer the other part of your question, the USDA, what's great about it is, again, it does have the mortgage insurance, but it is the lowest rate mortgage insurance that you will find from any other program. The FHA has a higher rate, conventional has a higher rate. The USDA has the lowest rate.
Interesting.
It does get applied monthly. That is part of your payment. It's already part of it. It's not anything extra anyone has to deal with outside of the mortgage, and it does stick with the loan for the life of the loan. So it does not fall off, unlike on conventional. It will fall off at 78%, less than 80%. Um, the USDA does not do that. It will stay with you for the life of the loan, and it's not something that you can buy out of or waive in any kind of way with that particular loan.
The only way would be to essentially do a refinance.
Refinance, yeah, into another program, typically
So,
conventional.
yeah. So, is there anything about the USDA loan that you wish somebody knew? So, in other words, it's something that you hear every single time, and it's almost like the piece of paper that you hold up whenever someone mentions USDA loans. Like, here you go. I know you're going to have this question.
Right. The main thing I always emphasize when I'm dealing with a USDA borrower is the home. Really, save yourself some time and energy, and don't look at the double wides, even though you may fall absolutely in love with it. Some of them are very beautiful. Do yourself a favor and just steer clear of those particular properties. But when we're working with professionals like yourself, you already know this, so you can help them. You can help guide them to the right property. The no down payment is phenomenal. Seems like everyone is looking for the no down payment. So that is definitely the key element to that program success. The flexibility of their underwriting, they have a tendency to be pretty flexible with some things. Generally, the underwriting rules are pretty easy. They love college graduates. They love new first-time home buyers. They love all of that. And they love areas like ours. So there's a lot of flexibility there because their goal is to obviously, help the economic development of our area. So they're they're just an excellent program in every way, shape, or form. They
Yeah.
hold up.
Um, yeah. So, What would you say, or what would be your best piece of advice for someone whenever they are trying to decide, um, should I do USDA, FHA, or conventional? And theoretically, let's say they have those options. What would you say is the best advice whenever they're trying to determine what best fits their needs?
Uh, well, it's all about their motivation. Well, everyone has a motivation. If they are looking for the lowest payment, most generally the USDA loan is going to be the one because of the lower mortgage insurance and also the great rates. Now, for example, with FHA, they have great rates, but the mortgage insurance is higher, so inevitably that payment's going to be higher. With conventional, they have higher interest rates and also higher mortgage insurance. So the USDA really fits when someone says, "Oh, I just need my monthly payment to be the best, that it can be." It's going to be the USDA program. Um, Obviously, not having any money down is excellent. Um, and just being able to finance more too. That's another thing. When you have that lower payment, generally people will qualify for a little bit more of a home.
Yeah.
So, when they're first time buying and they're out there and they think originally they can only purchase $100,000 home, once they see the payment on that, they realize, well, hey, maybe I can go up to 120, 125. So with that lower payment comes other great things.
Yeah, the only caveat I would add in there, because I think it's important, is that because we've talked about 100% loan a lot, is just the fact that the only way you can get that 100% loan is if you're able to get seller concessions.
Yes.
So to be able to add those in, so just make sure uh, that whenever they're talking about the RD loan or a USDA loan, that they're having those conversations with either their realtor or their lender about what that exactly means. I don't think we need to necessarily go down that rabbit hole and talk about it a lot, but it's definitely a conversation that, would you agree, that they need to have with their lender and with their realtor to understand what that means when they're placing an offer?
Yes, that absolutely is the case. Inevitably, especially if someone's looking for a 100% financing loan, they want to be able to fit the closing costs in the loan as well, or to have the seller to finance them or pay them. So that is definitely a key element in the beginning stages of a loan conversation. Again, with the USDA loan, the you can finance in the closing costs as long as the home appraises for enough. The difference would be, say, on conventional, they can only pay a small percentage of the sellers can only pay a smaller percentage of the closing costs. So sometimes people will run into issues there where they end up having to bring more money because the sellers cannot pay all of the closing costs. So that is definitely a conversation to be had up front because
Yeah,
most
because I didn't want
generally
to get into that too much because it's so individually specific to that
it is.
person.
It
But yet,
is.
it is definitely a conversation that that individual should have, at the beginning, to understand.
Definitely.
So,
Definitely.
and that kind of leads to the last question, and probably the most important question is, how what advice would you give someone that is going to get a loan to make their process as smooth as possible? What things should they do at the beginning? How should they handle themselves throughout the process? I know there's certain things that I do to make sure that tries to go as smooth as possible. But what advice would you give someone that's just
Um,
starting?
yes. Well, first of all, I'd say you've probably heard this a lot, and that is to know your credit. Have an idea what's on there. Look at the free credit programs. Don't pay much attention to the scores because those are going to be different.
Yeah.
But know what's on there. Know if you have any collections. Know what potential issues might arise from your credit card being maxed out or things like that. Know and understand your credit and work with people that will work with you on the credit. Many times you apply for a loan and you're just denied, and you really have no real understanding as to why. So you want to work with people that are willing to explain things to you. but knowing your credit going in, because all of these applicants start on the phone. Inevitably, they all start on the phone. So having a good idea of what is on your credit during that phone conversation is key to good information from any lender that you're talking to. Save as much money as you possibly can. If you know you're going to buy a home, you need to be prepared for anything, really. You need to be prepared for things that could go wrong. You need to be prepared for a lender saying, well, I'd really like to see these new buyers, have a little bit of savings, and go ahead and get a jump start on that if you can. With your tax returns, a lot of people want to buy homes, but they also want to, buy a new car and lots of other things. If your focus that year is a home, put that money in the bank, hang on to it until you know what you're doing with a home loan before you worry about anything else, new washers and dryers and things like that. Large purchases, my advice would be not to make them prior to wanting to purchase a home.
And especially during the loan process.
Oh, and never, ever, ever during. That is definitely something that I discuss with my buyers quite frequently. Don't do anything with your credit. Don't take out any new loans, no new credit cards, unless we tell you as a piece of advice to do that, which is something that's common, but we'll tell you what you need to do. But the last thing you want to do is not communicate with your loan officer during the process, and you just go out and buy new furniture thinking and knowing you might need it for the home, but maybe anything could happen. Until that ink is dry, you just don't do anything with your credit or your money in the bank that you've saved up. Nothing like that. And be realistic too. That is another thing. I think some buyers will come in to start looking at $200,000 homes, but yet they have a history of only paying $500 a month rent. Lenders do look at that.
It is really, really hard whenever someone has found a $200,000 home that qualifies for 120 to get them to to go, okay, yeah, there's a $120,000 home. So if you've got $200,000 taste, it can be a challenge.
Right. And the lenders do look at that. I mean, they call that payment shock is what they call that. So every other shoe could fit, but there could be a circumstance there where the lender says, well, I really don't like this payment shock. I think they should look at something a little less expensive, and I would feel better about it. Those things do happen. But if you have a good loan officer, they know that going in. So they can kind of forewarn everybody if that's a potential issue. I would also encourage people to do more localized, mortgage shopping. There's a lot of lenders out there on the internet that will just look at your credit and boom, you have a pre-approval letter, and based off your word on income and things like that, you get out there and you shop and you find that home you just absolutely cannot live without. And once they start collecting documents, things change. You have no face to talk to. You're dealing with someone over the phone. You may or may not be able to get a hold of them at times. Shopping local, I think, is definitely key for first-time buyers because I think they learn a lot more about the process, and they have someone face-to-face that they could actually go speak to. I always encourage people to work locally if they can. Not to discredit people online. We do Quicken Loans, so I mean I can't discredit what they do and what they offer by any means. But it does help when you have a local person, a local experienced person. It just makes people feel a little better.
Yeah, I always encourage people that communication, regardless of who you choose as your lender, because people choose different people for different reasons and comfortability. And that absolutely should be what they do, because it's the biggest purchase probably you're going to make in your life until you make your next biggest purchase. But you need to communication is the key. You need to be able to get a hold of whoever you're working with. to ask those questions and to be able to make sure the process is moving smoothly. So,
Right.
so again, thank you very much for taking the time today. If you don't mind, again, just go ahead and give us your name, contact information. What's the best way for people to reach you? Of course, I'll be putting that information on here as well, so that way people can reach out if they have questions.
Great. Well, we highly encourage. We were just talking about communications. We highly encourage our cell phones for people to contact first and foremost, which are just local cell phone numbers. You can text us. You can call us. We will generally answer at any time.
And what is that cell phone number?
That cell phone is, well, mine is 606-465-6843. And of course, we have others here like Keith, who is 606-465-6846. The local office number here in Ashland is 325-4500. And we also have a website that everyone is encouraged to go check out, along with the review section of our website, which basically tells you what type of services and what type of people that you're dealing with here. Long-term, educated, local people that care, and that website is www.easymortgageashland.com.
Excellent. Well, thank you very much. And again, people, I definitely recommend reaching out and asking those questions. If you have any further, reach out to me or to Terri directly, and we'll be happy to answer anything we can. If I can't get the questions answered, then I will pass you along. I promise you I will find it. So thank you all. And thank you again, Terri, for taking time with us today.
Thank you, Ryan, for having me. I appreciate the opportunity to help with your project.
Thanks. Take care.
Good.